Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before we start with today's discussion, please allow me to mention about an offer that will reduce your capital requirements for trading various segments like the NSE futures and the MCX futures. Okay, talking about the NSE futures, you can trade contracts like Nifty, Bank Nifty, SGX Nifty, etc. with just 6,000 rupees for one lot, whereas in MCX you can trade one lot of crude oil, copper, natural gas, etc. for just 4,000 to 6,000 rupees. Okay, for gold and silver, it will cost you around 10,000 rupees per lot. And not only this, you will be happily surprised when you get to know the other features that are being offered. I can't give you all the details here as there are many, but I will surely share all the details post you get in touch with me. In today's scenario, if you want to trade one lot of crude oil, you need to have a minimum of 1.6 lakhs as your capital, that is 1 lakh 60,000. Similarly, for Nifty, for just one lot, you need to have at least 1 lakh as your capital. Now replace 1.6 lakhs with 4,000 to 6,000 rupees and 1 lakh with 6,000 rupees. It does make a lot of difference to a retail trader like you and me, right? So that's the help I want to extend or offer. And if you are interested, then you can get in touch with me on the details that are being shown on the screen and we can take it forward. All right, so I'm very sure that you all are aware about the various chart patterns, and many of you might be actually using them while trading live, right? Now, one of such chart pattern that is insanely famous is the symmetrical triangle chart pattern. Okay, but I'm not here to discuss about the chart pattern because if you search in YouTube, you will get thousands of videos that explains about the symmetrical triangle chart pattern and the details about it. Rather, why I'm here is rather I would say I will briefly explain how this chart pattern is expected to be used, and then we will jump on to the real-time implementation of using this chart pattern. Okay, so basically, when we talk about the symmetrical triangle pattern, there are two subcategories to it. One is the bullish symmetrical triangle, and the other one is the bearish symmetrical triangle. And how it is supposed to be used is if a stock is in an uptrend, okay, and we get this chart pattern being formed on the chart, then we need to wait for the upper trend line to be breached, and post that the stock price is expected to be going up further. Okay, and similarly, if a stock is in a downtrend and we get this chart pattern formed, then we need to wait for the lower trend line to be breached, and post that the stock price is expected to be going down further. Okay, now this is theoretical, and yes, this is how it does work, but the question is, in real time, does it work like this? In real time, can we go ahead and buy a stock just because the stock is in an uptrend and the chart pattern got formed and then the upper trend line was breached? Can we actually take a long position just because we see this happening on the charts? Well, for me, the answer is no. Okay, so here comes the main topic. When and where should I initiate a buy or sell trade? And if at all I initiated a buy or sell trade, then what should be my expected target and stop loss? And let me also mention that whatever we are discussing in this video is with respect to intraday trading. Okay, things become a bit different when it comes to swing or positional trading. So what I was saying was, you would have always heard me saying that in day trading, if you are into intraday trading, it is always better to have multiple confirmations before you place the trade, before you place a buy order or a sell order. Okay. Also, you need to make sure that post you place the trade, the stock has ample amount of space to move in order to reach the expected target price. So when the symmetrical triangle is formed and the upper trend line is broken, that is just one confirmation that the stock price might go up. Now, as a day trader, you need to also look out for a second or a third confirmation that the chances of the stock price to go up is more stronger. So the anticipation that you are making should be based on multiple confirmations, and only after that you should place your order. Now, what I'm trying to say here, let me explain it on the chart so that things are more clearer. Okay. So let's get on to the chart. Okay, so this is the Nifty's chart, a 5 minutes chart, as you can see on the left top corner. Okay, and this day is 27th of July, as you can see here. Okay, so let me explain it one after the other. Now, so the day started with a big green candle, and then again it gave a big red candle. So it is very inconsistent here. In the first 10 minutes itself, you come to know that the market is inconsistent as of now. Okay, so it came down and it took a support here and moved up. Post it moved up, it started making higher highs and higher lows, right? The red small lines that you see here, this is a higher high, this is a higher low, higher high, higher low, higher high, higher low, higher high, higher low, and it continues. Okay, forget about this symmetrical triangle, I'll come to this later. Let's concentrate on this symmetrical triangle that formed at around 1:35 p.m. I mean, the initiation of the symmetrical triangle formation was started at around 1:35 p.m. Indian Standard Time. Okay, so talking about this particular symmetrical triangle, at when was the so this is the upper trend line and this is the lower trend line. Okay, the stock is in an uptrend because it is making higher highs and higher lows, and then a symmetrical triangle is formed here, and after some time the upper trend line of the symmetrical triangle was breached, and that was breached at around 2:55 p.m. Okay, now once that was breached, once the upper trend line was breached, that is the first confirmation that the stock might go up even further. But as I said a little time back, I mean, as I said some time back, just because the upper trend line was breached does not give you a confirmation that or surety that it will go up further. So, what should you look out for? Now, if you talk about me, how I analyze the situation is, if you see, I also have the pivot points mentioned here, right? So if I minimize, bring down the chart a bit, so you can see here, these are the pivot points, right? The white one that you see is the pivot line. Three red lines that you see are R1, R2, and R3, and the three green lines that you see at the bottom are S1, S2, and S3. Okay, so let's get back to the situation that we were discussing. So at around 2:55 p.m., the upper trend line was breached, and that was the first confirmation that the stock might go up further. But as I told earlier, you should also look out for a second or a third confirmation. The more confirmations you have, the more stronger your trade becomes. So, what can be a second confirmation here? For me, the second confirmation is R2, this line. Why? Because if I take an entry here, I have ample amount of space for the stock to move up before it faces the next resistance. So the R2 line, the red line that you see here, is the next resistance. And the gap, the space between this breakout and the next resistance is good enough for me to book my profits. So that becomes my second confirmation. So just to repeat it real quick, the first confirmation is that the upper trend line of the symmetrical triangle was breached, which gives me the hint that the stock might go up further. The second hint that I get is by seeing the next resistance level. You have to always concentrate on the resistance level if you are making a long trade, if you are buying. right? Because resistance is the point where the stock might stop the up move and it might break it, or it will retrace down from there. So that becomes a very significant, or that becomes a very important point which needs to be taken care of if you have initiated a buy trade. I hope that is clear. Okay, so I take a buy trade here once this candlestick closes. Okay, that is another thing that you need to take care, because only after the candlestick closes you will come to know whether the upper trend line has been breached or not. Okay, so once this candlestick closes, the 2:55 p.m. candlestick closes, you initiate a long trade and you set a target for yourself. Now, I will come to the target in some time, but right now we are just talking about the entry. So this becomes your entry, and I hope the two confirmations that I talk about, you are quite clear about that. Okay, now let's have a quick talk about the stop loss. The stop loss is absolutely simple. The candlestick that breaks, the upper trend line, place your stop loss just below that particular candlestick. That is stop loss number one. That is one way of placing the stop loss. If you want to give it a bit more space, then place the stop loss below the recent swing low. So this is the swing low, right? This red candle, the 245 candle that you see here, that is the recent swing low. So you put your stop loss just below the previous recent swing low. So either you place your stop loss here somewhere, or you place the stop loss below the candlestick here, which actually breaches the upper trend line. I hope that is clear. I hope you're clear on the entry and the stop loss. Okay. As I said, we will talk about the target in some time. Okay. So I hope you're clear now as to when and where to enter a trade. The trick for a good trade is to catch the right breakout, and to catch the right breakout you need to consider multiple things. Okay, now this is one part of trading the symmetrical triangles. Okay, now moving on further, this is just for your info. Okay, every chart pattern that we trade tells us what is the target for the trade. I mean, this is one of the beauties of trading the chart patterns. Okay, so the rule for setting the target when you trade chart patterns, especially the chart patterns, is your minimum target equals the size of the pattern itself. Now, obviously, this is theoretical. Let's get on to the chart again and let me explain what I mean by this particular statement. Okay, here, the purple dotted lines that you see here. Okay, this, the first purple dotted line that you see here, that is the size of the pattern itself. So you draw the upper trend line and the lower trend line, right? So this, from the top to the bottom, this gap, okay, if the gap is 10 rupees gap, right, then your target should be 10 rupees after the breakout. Now if this length, okay, this size of the pattern is, let's say, 5 rupees, then after the breakout, after you make your buy entry, you should expect a 5 rupees up move from there. As simple as that. You got it, right? So if the purple line is a 10 rupees purple line, that is the size of the pattern, you set a target of 10 rupees. If the size of the pattern is 5 rupees, you set a target for 5 rupees. Now here comes the catch. Is it always that if the size of the pattern is 10 rupees, you will always be able to catch a profit points of 10 rupees? Obviously, the answer is no. As you can see here in this example also, the target is around 16,662, but the high that was made was around 16,653. Okay, so there is a difference between the theoretical concept and what happens in the reality. And this is the exact reason why I always ask you people not to have a target at the exact numbers. So let's say, for example, I always follow that 1% rule you might be knowing about, right? What I mean by 1% rule is, if I'm trading a 500 rupees script, after I make an entry, I expect a 1% move as my target price. So if I'm trading a 500 rupees script, I expect a 5 rupees move. But do I book my profit at exactly 5 rupees? No. I always book my profit at around 3.5 rupees or maybe 4 rupees or maybe 4.5 rupees. So if the script price is 500 rupees and I took an entry at 510 rupees, I book my profits at around 513 rupees or 514 rupees or maybe 514.50 rupees. I never wait or I never become rigid that unless and until the skip prices reaches 515 rupees, I will not book my profits. That is not how the markets work. You have to be flexible. I mean, it will not make a major difference in your profit taking if you are booking at 4 rupees rather than 5 rupees. What's important is your trade was a good trade and you are profitable. So have an eye on that particular thing. Okay? Never be rigid or never be stubborn on the fact that if the size of the pattern is 10 rupees, I will book my profits only when the price reaches 10 rupees. No, you can also book out at 7 rupees, 8 rupees, or maybe even at 6 rupees. Not a big deal. Okay, so I hope that is clear. I hope you're clear on how and where to book your profits. Okay, so this is one way to decide your target. I mean, the dotted lines. Okay, that is one way to book the target. But in real life, if you ask me, as I explained earlier, I follow the 1% rule. Okay, so I would say both of the methods are good enough. Okay, but to avoid being greedy, you can follow the 1% rule way. Okay, that I follow. Now, if you see on the chart itself, if you follow the theoretical way, the target was never hit, right? So here it was the target, and the stock price went only till here. It did not catch up with the highest price as per the theoretical concept. Okay, so what I have learned, or if you ask what my experience is, I would always go ahead with the 1% rule, because what I've seen is if we follow the 1% rule, that becomes more easier. The target is achieved more easily without any struggles. Okay, so the decision is yours. Okay, I just gave you the best options that I had. Okay, so hope that is clear. Now let's talk about this particular symmetrical triangle. So we have explained everything about this symmetrical triangle, right? It was a successful trade and everything went well. But how about this symmetrical triangle? Why have I mentioned this as a bad anticipation? Let me explain that. So again, the stock was making high highs and higher lows, and then you see this symmetrical triangle to be formed on the charts. Okay, and this candle, the 12:50 p.m. candle, actually breached the upper trend line, and that gave you a hint that this stock might go up further. Okay, so that was one confirmation that you got. Now the question is, will you take, as a day trader, will you take or initiate a long position here? I mean, think for yourself and answer yourself. Now let me answer this question. If I would be you, if I would be in this situation, I will never initiate a buy position. Why? The answer is simple. Because I clearly see the R1 line here, and that might work as a resistance. As simple as that, right? So even if this particular trend line is breached, I'm sorry. So even if this trend line is breached, the next thing that I see here is there is a clear resistance that might be faced here by the stock. So what is the point to initiate a buy trade? I will not initiate a buy trade. Okay, it's a completely different thing that it went up. Undoubtedly it went up. But who will guarantee that it will this stock will go up even though you see a resistance here? Nobody will guarantee that, right? So as a day trader, you need to stick back to some rules. And this is one of the rule, that if you want to initiate a buy trade and if you see that there is an immediate resistance just above the breakout, then obviously you should not go ahead with a buy trade. You should wait for another formation to happen and then you decide. Okay, so that is the reason why I mentioned this as a bad anticipation. So no trade here. Okay, just one more example for you guys so that you can be clear. Now here also there was a symmetrical triangle formed. So this stock on 28th, Nifty was making higher highs and higher lows, the lines that you see here, right? So that tells us that it is in an uptrend, and after some time, the symmetrical triangle formed. And this candle, the 1:45 p.m. candle, actually breached the upper trend line and closed above it. So that is the first confirmation that the stock might go up further. But do you see a resistance just above the breakout? Yes, of course. It is very clear. There is a red line. This is the pivot line. That is, I think, R3. Yes, that is the R3 that is sitting right above the breakout. So, as a day trader, should you initiate a buy trade here? The answer is no, obviously. And after some time, you can clearly see it here that it tried breaching the resistance, but the pivot came out to be a really strong resistance and it pushed the stock prices in the down way, right? So if you would have decided that, okay, here is the resistance, so I should not be initiating buy trade, then you will pat yourself after some time when you see that the stock actually falls down. And if you are a trader who doesn't care about the technical analysis, or who doesn't care about the resistance that is being shown here, and if you take a long trade, then you know what's going to happen. Obviously, the stop loss will be hit. Either you put your stop loss below this candle, or here below the recent swing low. Both the stop losses would have been hit. Okay, so I hope you got the exact thing what needs to be done in a live market. Okay, so this is how you take up the charts. This is how you study the charts in the live market and then decide whether you should go ahead with the sell trade, or you should go ahead with a buy trade, or you should not initiate any trade at all and wait for the next opportunity. This is exactly the thing that differentiates between a good trader and a bad trader. Okay, so that's all from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of the video, the I symbol that you see there. You can click on it and watch my previous video. And as always, would request you all to like and subscribe to my YouTube channel. And also, please do not miss the ending of this video, as you will get to know some more details about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. Okay, and also please do not forget to like this video if you liked it. So that's all from my end. I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.